Welcome back, session 16, FinViz. We're going to find out what opportunities we can find today. Let's start with Clearfield. Happy holidays to you guys. I hope you guys are doing well. So this is what we start with is FinViz. It's a free stock screener. We go to technical, and then we go 30% or more below the high. And then we go price over 20. And that's it. That's only two criteria we run. We get 289 results. And then I sort by PE ratio. Why? Because the PE ratio basically tells the price per the earnings. And the average what we like to see is 15 to 17. If it's less, that's even better for us. That means that the earnings are really good, really attractive for that price. And that'll make sense as you continue to watch these videos. We do these daily. Welcome to subscribe, be part of our family, and we'll come out with some incredible content. TLFD is what we're looking at. We begin the fun on Big Charts, another free tool. And this is where we can see and start the evaluation process, see how good these stocks really are. So Clearfield, 13.3 is the PE ratio. The weekly range, you can tell we're coming in at a good time. Now we just have to run different criteria for the stock and see how quality the company is and if it's something we want to invest in. So the first thing I do, I go like 10 years, see what that looks like. So looking at this chart, it really looks like the breakout was mid-21. So something happened, whether it just took this long. It takes a long time to get a company profitable, up and running the way it needs to be. It can take a decade or two for that to happen. So 21 might have been their time. The timing is right for this company. So that's what I know about it. So recently, for whatever reason, they started gaining investors' interest in the company, and now they're starting to have a chance to outperform the market. In the last 2 years, it's been an up and down roller coaster. Let's see the last 6 months, and then we'll check the earnings. So the earnings are pointed downwards. Okay, we'll go macro trends. CFLD, Clearfield. CLFD. And what we're looking for here is the earnings trending up. So that way we, as investors, can predict where the stock is going and determine like an evaluation of that stock. So let's see, 2016, it was 60 cents and it dropped in half. And then like we were saying, it looked like on the chart, 21 is when we'll take note of what happens at that time. But 32 to 34, 53, $1.48, 358. So nice upward movement. 358, it had a downturn this year. However, it still progressed nicely. So what I like to do is go from 2017, see what that was, 28 cents to 217. And find out the return on the earnings, the annual percent growth was 96%, which is absolutely huge. And of course, the question is, can they have that going forward? Can they have, and it doesn't have to be obviously 98%, that's unrealistic, but it would be nice if they return 20 to 30%. So what would that look like? So 217, we'll type in 7. 31%. So we're inquiring on in 7 years, they need to get a 7. And right now they have 217. So as an investor, for us to start tracking the stock, this is the criteria that we're looking into. And we have to ask the questions to see what our predictability is to hit these goals. Now, the last thing I'm going to do with this one is I'm going to check the money situation and decide. I think they're good enough to put on our ticker. Not many companies can do what they have done so far. And if they can get back, even if they double and we invest at this level, it's good enough for us. We just have to figure out how possible that is. So under financials, cash flow. I hope you guys are having a great day. It's always fun doing this. I love to investigate these companies. The way I think about it is one company can change your life. If you invest in the one company at the right time, I mean, think of eBay back in the inception days, or think of Amazon, or Microsoft. I mean, there's so many, but there's companies that you don't realize that had a big impact on stock wealth, such as Chipotle or Monster. There's just so many of them. They come out all the time. That's why we check this every day, because it's exciting. You never know what the world will bring in and represent to you, but we have to be prepared and want it in our lives. Make time for it. So 48.88, we're checking the money, the cash flow. If there's a great company out there, what is it going to have? It's going to have free cash. That's important. Even though it's small, this company, like I said, really just started treading water halfway through 21. And for whatever reason, again, we got to figure that out. So they're good enough. I'm going to put them on our hit list. We'll go to a list that we have built together as a team. Clearfield. And we'll check their website and everything else. We have data already inserted, so we just enter it down here. And then 12/29, I added a date. So from now on, we'll see the date, and I'll update this log for us so we can check it all out. All right, let's get back to it. Maybe find 1 or 2 other companies. Clearfield was good. I liked it. Specialty Chemicals, NGVT. Check that one out. Six months, a little lagging. So we like to start at 10 years. It gives us the most amount of data. And I love this. This is exactly what we're looking for. Domination hasn't been around quite 10 years, as you can see. Date it started was 17. We'll go 4-year. See what that looks like. Looks like pandemic hurt them a lot, like it did a lot of companies. And it looked like after that, they're still struggling, trying to outpace the market, which is understandable. Okay, and as far as timing goes, we're at a good time. It's not great. Obviously, you'd like to be closer to that 36. They got already a strong run up from that. NGVT, we'll check the earnings. See what that looks like. Okay, earnings. So they started at $3 in 2017. They went to $4.39. They got stuck $2.97, $5.54. And let's see this year. If this year's up, I'll probably add them. If not, then I don't know. We'll have to see the return. Okay, so $3.30. If I was to guess, I think they're probably going to end up around the $4 range. And that's kind of where they started. I mean, 3 to 4, not very promising. We go 3 to 4. And what we're looking for here is probably around 20% or greater, just because it's a newer company. It's easier to bring in bigger returns earlier on, but for some reason they're just not hitting. So for me, it's a no-go. I think we can find better companies that are more reliable. Shutterstock, we'll look at that. SSTK. This company I am familiar with. You can photograph videos and photos and post them and make money from that. I ran into people at the park that take pictures of bald-headed eagles and other koi fish, things like that, and get money from that. And they're getting into music and other things. It's an exciting company. I like the looks of them and where they're headed. Now, as far as their management goes and other things, that's something we have to look at. Yeah, they're not outpacing the market, which is concerning. We like it the other way around. But over the 5 years, they are starting to tread water above the market, which is important. Okay, our timing is better than good. Not great, though. We'll look at the earnings, see what we can make of it. SSTX, or K rather, SSTK. SSTK, C20, okay. We'll look at 2017, 48 cents, $1.57. So they added $1 to that, very good. Then they went down, they lost their $1. Then they're up $2, $2.52, and then down to $2.11. So there's, from the tail of this tape, they're struggling. They're not continually bringing in increased earnings. And believe me, when they're at the board and they're talking with their directors, this is what they're talking about. How do we increase earnings? And I don't know how they're spending their time at the meetings, but obviously the results speak for themselves. They're not doing too well. 220, we got a 3. And then for this year, maybe they'll be closer to 4, which is great. But it's just, they're hurting at these different time horizons here. So something to keep an eye out. But, 48 cents. And we predicted right around 4. We'll call it 390. What I like is their positive earnings, though. Yeah, they're expanding well over the long term, and that's important. STK, and we will look at their financials, see what's going on there, and if that looks good, we'll add them on, and then we'll call it a day. I think finding 1 or 2 companies a day keeps the financial advisor away, right? So we just gotta do our legwork and see what we can become of it. 73 grand, 136 to 107. Very nice. Very nice. It's not negative at all. It's always positive. They're relatively new. Got to give them somewhat of a break. Just a little concerning with the earnings dropping like that. But they do rebound right away. So that's very important. So indeed, we'll go ahead, log them to this list. Shutterstock. We got our 2 companies for today. And then 1229. And then as we come back, we'll look at the log and see how we're doing, seeing what the price is. We'll go 29.21 here, and then 48.35 here. And then we'll have the percentages. Obviously, we're coming in right at the right time, but we set this all up under D. So this will change as the market changes. So throughout the day, this will change. We go with the Dow Jones Industrial Average for our index, and it's a little lower today than it was yesterday. So let's see, the stocks in review currently 35% up. IPR, Harley Davidson almost 6% for Polaris. AMN almost 7. Johnson Controls 6.4. Universal Logistics 8. WNS 0.17. Alliance 7 or 1%. InMode 7%. Medfast 3.4. Albemarle went down 243. Sociedad for almost 5%, Dollar General 9% since it was recommended, and Crocs lost 10%. And now we have Clearfield and Shutterstock that we added to the list. So very exciting stuff. Tomorrow, I want to go over, we'll have another FinViz session sometime this weekend. And then I want to go over my wins and losses for the year, share what we can get better at as investors and learn. This is always a learning experience, and it's just like anything else. The more we practice it, the better we'll get at it. Have a great day, guys. Appreciate you joining us. Thank you. Bye.